This JTS Mortgage Minute is brought to you by JTS and Company Mortgage Brokers.
Welcome back, everyone. Jeff Farnham joins us now with the JTS Mortgage Minute. Jeff, good to see you again.
Good to see you, Bill.
A lot of times you hear people talking about a reverse mortgage and not knowing what a reverse mortgage is, especially for most older folks, and it can be a problem for all this older generation. What exactly is it, Jeff?
Well, you know, it's a mortgage product that is really growing in demand and opportunity. You know, there's estimated some $6 trillion in senior equity in their homes throughout the country today, and one of the things we saw in first quarter 2016 was with the reverse mortgage market index was actually reaching an all-time high, and that suggests that more and more seniors are taking advantage of the reverse mortgage product. So on top of that, what we're finding out is that more and more seniors are working well into their 70s to continue to pay for their existing mortgage or to continue to support their life and survive as the cost of things have gone up. So a reverse mortgage may be a good answer for some of them to utilize basically what the reverse mortgage does, let you access the equity in your home. There's lots of seniors out there whose homes are paid for or almost paid for that can use some of the equity out of the home. It's a tax-free to provide additional income or maybe eliminate the mortgage payment itself through that product.
Now, how does this program work, and are there different types of reverse mortgages?
Well, there are some different types. The typical one, the most popular one, is the one that's insured by the Department of Housing and Urban Development. It's called the HECM, the Home Equity Conversion Mortgage. That's most typically what we see is utilized. You apply for it in the same way you would for any other mortgage. You retain ownership. One of the big misconceptions is that you give up ownership to the home. You don't. You still own it and retain it just like you do now. If you've got a debt on it now with a mortgage, with a reverse mortgage, you have a debt on it just the same way.
Is there a difference between a reverse mortgage and a home equity loan?
Yeah, you know, a home equity line of credit is actually a second mortgage that does have required repayment terms. It's a revolving line for a period of time, and then it turns into a fixed rate type product or a fixed payment product after that. Whereas a reverse mortgage, you're not required to make a mortgage payment. You just got to keep your taxes, insurance current, keep the property up.
Of course, the UK has been in the news a lot this past week or so. How is this Brexit going to affect us?
Well, you know, right now the outcome is nobody really knows, but it's really had a favorable impact on mortgage rates. We've seen the Dow's has been down over the past couple of days. We've seen the mortgage rates take pressure off, and really a good time if you're considering buying or refinancing. We're seeing a little bit of a bottom here, so that's good news.
Jeff, good information as usual.
Yep.
And if you want more information, you can go to their website at jts-co.com or call them at 329-9090. We'll take a break, come back with more in just a moment.